Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. I have my good friend, the champion of YouTube, the people's champion, the man, the myth, Todd Sachs, with us today to talk about subject 2, to talk about Pace Morby. Is it legal? Is it not legal? Is it a Ponzi scheme? Is it not a Ponzi scheme? What's going on with subject 2? But before I tell you guys about that, and Todd tells you about that as well, let's first see what's going on with Todd Sachs. Sir, what's going on with you?
What's happening, Travis? Always a pleasure, my friend, to share the screen with you, man.
I love it, brother. You know, iron sharpens iron. You definitely bring out the best in me, never the worst in me, Todd. Let me show our viewers first, Todd, your channel, and then we'll really kick this off. You guys go to Todd's channel at Zach's Realty. He is a champion out on the East Coast. He's warning consumers. He's telling consumers be cautious. Use the data to find the deal. Warning people of the toxicity in the market. Go to his channel, Zach's Realty, which is right here. Like it, subscribe to it, and I can pretty much guarantee you. You guys are going to like his content. He's very cautious. He's a very realistic man. And he has his boots on the ground. He's an active, broker. Is that right, Todd? You're a broker?
I am.
Sorry to hear
that, Do a little
brother.
Production myself, yeah.
So, one of the prerequisites of a broker or something that comes along with the job is dealing with all the drama. So props to you for dealing with the drama. I don't like the drama.
Yeah, I get to get all sides of it, right? I get to deal with, if I'm doing the production firsthand, I'm dealing with my clients, and I don't mind doing that, but I'm dealing with the agents on the other side. But certainly managing transactions, other agents' transactions is part of what I do. And that, my friend, is challenging, especially in this crazy market. So
yeah, I mean, the market's crazy and emotional. So guys, I'm going to start, Todd, by playing for our viewers an advertisement of subject 2, an advertisement of Pace Morby. And during this advertisement, guys, he's going to really go in like high past face. He's going to make it sound super sexy, super easy to do. But I want to start there so that we're all on the same page on what exactly people are saying about subject 2.
Do you want to make more money? I'm at a property at 1150 North 88th Street where a real estate agent got fired from this property. They had it listed for over 5 months and they couldn't sell the house because the seller had a lack of equity. This happens all the time. In fact, in just my county, there's over 900 of these happening every single month. What I did is I taught somebody to go talk to the seller directly after the agent was fired and bring the deal to me. I took over the seller's existing mortgage at 3% interest, $1,700 a month. And after I put it on Airbnb, I will net somewhere around $2,100 per month. Everybody else got paid on this deal except for a licensed real estate agent. So if you're an agent out there struggling to find opportunities, struggling to make more commissions, you got to use creative finance to dominate. So I put a case study together to help you understand these strategies in the description down below.
Todd, go.
Well, it's kind of interesting. 900 of those deals in his neighborhood. I'd like to know where that is. I mean, I don't know where there are 900 houses for sale in any neighborhood or any area, but especially 900 of them where the agent got fired. I mean, I don't know, maybe they did. Maybe it's somewhere I don't know about, Travis, but sounds kind of crazy. But what, I guess the message here, and I don't know Pace, I know people who know him, but I think the message here is that, he's trying to attract a real estate agent saying, hey, get fired from your transaction. And then when that happens, you'll realize that there's no more for you and join me with subject 2. I guess, Travis, what do you think?
I mean, when I first watched that, to me, it sounds crazy. First of all, you're not going to find many sellers with a 3% interest rate, Todd, that are underwater on their mortgage, and that where it makes sense to not sell their mortgage. But, what I get from it is basically they're trying to find desperate sellers before agents find them, per se. They're trying to find them that are, underwater, and they want to take over their mortgage at 3% and then list it on Airbnb. I think it's horrible. And not only is, at surface value, we'll dig in more into this. And I don't know Pace Morby either. I'm just looking at the subject to legalities. The thing is these mortgages, whether it's FHA or conventional, all of them have acceleration clauses. And in other words, they could accelerate the loan that these people are taking over. So there's a lot of risk, but let's look at the law. According to an attorney, subject to what's the risk? When you're buying or selling a property, one option that you might encounter is a subject to mortgage. In this type of transaction, the buyer takes over the seller's existing mortgage and agree to make mortgage payments moving forward. While subject to mortgages can be an attractive option for both buyers and sellers, there are also legal risks involved that should be carefully considered. Now it goes into the buyers, Todd. And here's really the thing. If someone buys a property and they inherit and take over someone's mortgage, people need to understand by doing that, if the lender discovers that the property has been sold subject to the mortgage, they could demand a full payment, which could cause significant financial hardships for the buyer. Another risk for buyers is that the mortgage payments are not made on time, which could result in foreclosure. Okay, so there's also risk for the sellers. One of the huge risks, Todd, is the seller is generally legally liable for the mortgage the entire time. So if someone takes over their mortgage, they're locked into that mortgage. And if that buyer is late, it hurts the seller. And not only that, if the seller betters their life 5 years from now, what's to stop the seller from calling the lender and say, hey, I sold this property, get it off my credit, right? It could cause problems. Here's the conclusion from this attorney. Subject to mortgages can be an attractive option, again, for both buyers and sellers, as they allow for a quick sale and the transfer of an existing mortgage. However, there are also significant legal risks to consider. Buyers must be aware of the risk associated with taking over an existing mortgage and should carefully evaluate the seller's ability to make timely mortgage payments. Meanwhile, sellers must consider the legal obligations of potential financial liabilities involved in subject to mortgage transaction. As with any real estate transaction, it is always advisable to seek the advice of a legal professional to review any agreements or contracts involved. Todd, your opinions.
Well, Travis, when you were first saying that if the bank finds out, they're going to find out because the deed is transferring ownership and the existing mortgage is with the people that applied for the mortgage, were qualified for the mortgage, obtained the mortgage, and whether they're behind in their payments or not, they're going to know, they're going to find out. So every one of these loans has a due on sale clause. That means exactly what you just read. And I'm not an attorney, but when the transfer of the ownership goes to the new buyer, in a lot of cases, that's the investor, right? This is just another twist of a way, to get the property as an investor with little to no money down, take over somebody's mortgage. In some ways, some people may think this is a predatory type of thing that's turned around as like a benefit for a seller. I don't know how it benefits the seller because if in this market right now, in my opinion anyway, and by the way, I know people that have done this, and I think on a small scale, it works. I don't think it's illegal. I've talked to a lot of attorneys about it. I don't believe it's illegal. It does violate the agreement with the mortgage company, the bank, and certainly the investors that are on the secondary market that maybe have purchased that mortgage. Maybe from what I've heard, they'll be okay if the payments are made, things like that. There's no guarantee. Travis, what I see in this issue here, okay, it's an incredible amount of risk for the seller. I don't think it's as risky for the buyer because if it's an investor and they're putting down very little maybe to bring their payments up to date, I don't think it's very risky for the buyer, especially if they can pony up the cash if they should need to. I think the risk is really on the seller because if that buyer doesn't continue to make the payments, if that buyer, and it defaults, the seller who no longer owns the asset legally is on the hook for all of this money, right? And I think the real thing comes down to, is this an ethical issue? That's really what I think that we need, will come out in the, in the long haul. But Travis, I just want to add one thing. Right now, it's mainstream media covering Jay Powell, covering the Fed, the FDIC, covering the fact that banks have been bailed out, right? So a lot of these banks are servicers. They're responsible, right, for servicing the loan. And what's happening is there going to be some kind of, extra responsibility put on these servicers, these banks that are servicing these mortgages when they're borrowing money from the federal government, because if they don't, they're going to go bust,
Yes.
right? Or they're going to get taken over. Are they going to be part of their responsibility to make sure that this due on sale is enforced and escalated to protect everyone's assets?
Yeah, I mean, because quite frankly, we understand why people want to do this. They want to, investors that don't have that much money want to avoid the higher interest rates, the same as in the 70s and 80s. But Congress passed, I think it was in 1983, basically passed laws where you can't do this. If rates are higher and you want to buy, you got to take the higher rate. You can't do these loopholes. But the thing is, Todd, there was one mistake that you made, brother. And this was alarming to me, okay? And we're going to listen to a video right now that's going to go into this. They teach, as far as what I can research, they teach you not to transfer title. They teach you to get the deed, but don't record it. They teach you never to notify the lender. Let's play a video right now.
Yeah, and I don't know. Now that to me sounds, I don't know the legality of that.
Todd, I've highlighted a couple segments in this interview with Pace Morby and Graham Stephan that I think it's important to pay attention to. Take a listen to what he's saying.
Now, what happens though if the due on sale clause comes out?
This is great. It does happen. Okay. First time, there's a couple of things about this, and this is something that real estate agents don't know, but it is in the real estate exam. It's like that 20% that they fail on. It's called an executory contract. Okay. So have you ever sold a car cash? Okay. And you have a title, right? Mm-hmm. And you sign the title, you notarize it, and you hand it to your buyer. Yeah. When does the buyer become the owner of that car?
I believe it's as soon as they sign, right?
So they don't sign. You are the only one that signs.
Okay.
Right. So you sign over the title. The second they have possession of the title is when they become the owner.
Okay.
Why? Because they now control the asset. Does that make sense? So they can go down to the DMV or MVD, whatever they call it, and you can record that document today, or you can record it in a week. You can record it in 30 days, but you're the owner because you control that document.
So Todd, he's about to go into not notifying the lender, but the thing is like, unlike a car, you're using someone else's money that you're not allowed to use. When we buy and transfer titles on cars, we have to qualify for a loan or we have to use our own cash. In this situation, they're not allowed to use someone else's money. Thoughts so far, Todd?
Yeah, well, there's something else called title work, right? So it could be extremely risky if someone is not performing title work on a property, because not only can they be, taking on the debt of that, mortgage that they have to continue to pay, or it will get foreclosed on and they won't own it anymore or have that title anymore. But really, if they're not doing title work, there could be a whole lot of other things that could be encumbering that property that could be risk for the investor. But I don't know the legalities of, what should you do? Is there something in the note that says, should you transfer, that there is a requirement that that deed gets recorded? I mean, look, these notes are they're very comprehensive. And, they are, written by attorneys, and banks are like something serious that they protect their assets pretty well. In fact, if you mess with bank documents or do things, again, I'm not a lawyer, I'm not a law enforcement officer or what have you, but I would be concerned about, is there any kind of fraud that could potentially be, an outcome of not doing? You'd have to, you better seek an attorney.
And you want to know what's interesting about fraud, Todd? Technically, there's no statute of limitations. The statute of limitations on fraud starts upon the discovery of fraud. Case in point, Lennar just got sued by the FDIC for bad loans back in 2008. No statute of limitations there. They could follow you around for fraud forever. But let me go back into this video and let's hear what else he has to say.
So what triggers the due on sale clause? I'm going to come back to that. What triggers the due on sale clause?
Probably when you report it, right?
There you go.
Okay.
When the deed is transferred, right? So this is interesting. Jack, you're not a real estate guy, right?
I have a house, but that's about it.
Love it. Okay, cool. So you have a house, you have a mortgage. right? So you pay a payment,
Yeah.
and you're the owner.
Yes.
Cool. So think about this. If I go to a grocery store and I use a credit card, you're a big credit card guy, you like credit cards, right? I go buy groceries with a Visa credit card. Those groceries come to me, but I use somebody else's money to buy them. Who's the owner of those groceries?
Yeah.
How do you know? You use somebody else's money.
Is that possession?
Okay, possession, but you also have something else. What else do you have? The receipt.
Oh.
Okay, the
Yeah.
receipt proves that you have ownership, right? So in real estate, what is the receipt?
Almost done.
H.
The deed. Whoever has the deed or
What? Listen.
control of the deed is the owner of real estate. So your mortgage company is not the owner of your house, right?
No, they're not.
They're not. Just like the credit card company is not the owner of those groceries. So there's the debt, and then there's the ownership documents. They're
Okay.
Travis, I mean, come on, man. When you go and buy a bag of, 6 ears of corn, right? You're not signing a credit card agreement for the 6 ears of corn.
All right. Credit card.
It's
You're
an
using my credit card.
unsecured, a credit card is an unsecured debt. So you can't compare. I mean, I don't know how you would compare buying a jar of mayonnaise and owning the jar of mayonnaise and eating it all up on your sandwiches,
Yeah.
but yet not paying your credit card debt. Let me tell you something. You didn't sign a deed in lieu or a note or something for that jar of mayonnaise like you did for 123 Main Street, that you signed multiple affidavits that you were going to live there as your primary residence.
Boom. You took the words right out of my mouth, man. Let's go. I mean, dude, this guy is a smooth. I mean, do you see how he kind of belittled that other guy? Like, hey, you a real estate guy? Oh, you're not? So shut up. He's a smooth talker. Let's go back into this next part, which is going to go into how you shouldn't transfer and notify the lender.
So you're saying you just hold the deed?
You can. Okay. So let me get to this.
Okay.
I'm building up to it.
Sure.
So if I take over a deed on a Subto transaction right here on the San Antonio deal, okay, if I take over the deed, and let's say in 6 months the mortgage company notices, this is when he says due on sale clause, this is what that means. Mortgage company goes, hey, Pace took over that house subject to without paying off the debt. They transferred the ownership from owner A to Pace without paying us off. They have the ability, not the obligation, they have the ability to demand that I pay them off because I bought the house. That's
Just in full with the entire
yes, in full.
Usually it's like 60 days or something.
Yeah, so they have to go through the foreclosure process to make it happen. Okay, so that's called the due on sale clause. So that poses a risk to two people, poses a risk to the person who sold the house to you, and then it also poses a risk to you who just bought the house, where you're like, I didn't put any money down. I took over the mortgage payments. I've now got tenants in this property. I'm cash flowing. Those tenants are paying down this mortgage that I just took over. This thing is awesome. All of a sudden I get a letter in the mail that says, we demand you pay us. That's the due on sale clause.
You know what's hard for me, Todd? The reason why I even made this video is I had commenters, telling me that I didn't know what I was talking about. I was talking about assumable mortgages and how Subto is a violation of contract law. And they're like, no, you don't know what you're talking about. But we just heard the guy that invented this whole, and I'm not going to say Ponzi scheme or cult. I'm not going to say that yet. But they don't even know, like what he just said, the risks, the acceleration, they can't even comprehend that one part. And the other thing that's crazy about this, Todd, is it cost $8,000 to join this cult. I mean, please, I didn't mean cult, to join this community. What are your thoughts on this, Todd?
I'm not an attorney, Travis, but I want to tell you about a scenario that I had where I had a client that was moving and was selling a house, and they had to have, and this happens all the time, a dry settlement, right? Which means that until the funds, we do the settlement, we do the closing. I mean, you're a loan officer, you know this stuff. You do the settlement, right? But until the funds get recorded, the title company does not, I mean, until the funds get received by the title company, right? They don't file the deed showing that the ownership has changed. In my experience, and again, I'm not an attorney, anything that happens to that house, the ownership is still, until that deed gets recorded, the one who signed it, technically, because they signed it. Now, they may have given it to somebody else, but I don't know that means because I have the piece of paper in my hand, until I record that, I think it's still the seller's. I believe, right? Now, I don't know. I'm not an attorney. Pace Morby, I'm sure, has some freaking, shaking your shoes attorneys that are, working for him. I mean, he's doing pretty well, right? I'm assuming that he has those bases covered. But my point is, I don't know what the legality is on who may hold the title, but what happens if there's a liability on that house? Who's covering the insurance policy on the house? That would be my question. Like somebody falls and breaks their neck on the property and they sue at that point, do you just fold it up and put it in an envelope and ship it back, that deed back to the seller and say, well, it's your baby because I never actually recorded this deed, so technically you still own it? I don't know.
It's dangerous.
Or is that the plan? That could be the plan too. That if the bank ever does find out or whatever, or maybe they never will, but then you just ship it back, no harm, no foul. Hey, Travis, it was still your property, man. I never followed this thing. It's yours. It's yours. You keep it.
One thing, Todd, you hit the nail on the head, and I went into the community to look at like some of the questions that people were asking. But one thing that's incredibly difficult to do that they're not talking about is if, say, they take over a loan that has escrow, that has property taxes, and has insurance in the loan. How do you continue to pay your escrow, which is generally a requirement of the loan, like FHA, VA, USDA, or a conventional mortgage with less than 20% down? You have to have escrow, taxes, insurance included in your payment. They're not going to, that doesn't easily happen if the title's not transferred. To get insurance on a property that's not in your name is incredibly difficult to do. I know that because I've done it before. It's extremely hard. And another thing that sucks, Todd, is you cannot like fight the assessment of your property taxes because you're not the owner. So there's a huge amount of risk here. What I want to do now is let's listen to someone that has paid the $9,000 to join the community.
And before you do that, Travis, let me just say, I would think that somewhere in this subject to contract agreement with the sellers, that it would be something in there that they have to maintain the insurance policy or, forward the records or whatever. I don't know how that would happen, but you're right. I mean, as a real estate investor, I mean, if I know that my tenants in my properties can get landlord insurance, I mean, not landlord. I know that the tenants in my properties can get renters insurance, right? But I think the issue is, can they cover the property that will, in my name, that's going to meet the obligations of the lender? I don't think so.
Exactly. And that's the point. Like we get it. Oh, it's a receipt. Oh, the mayonnaise cost this much, but we're talking about the money that they're using that they're not allowed to use. That's what we're talking.
A good point.
Like who cares what the buyers and sellers are agreeing? That's fantastic. But what about the $300,000 that's attached in encumbrance to the property? There's requirements of that loan that they are violating. So to me, if I'm an investor, my portfolio is not going to be built on a foundation of people that can wreck me if they chose to. Todd, I'm a firm believer that we should be listening to the people that actually are doing the things that we're talking about. Here's a video right now from someone that invested in Pace Morby. He said he put the fee on his credit card, the $8,000 fee. Listen to a little bit about what he has to say about the program of Subject to.
Good morning. So it's been 6 months since I joined Subto. It's been crazy. It changed my life completely. 6 months is a long time. I remember when I first joined Subto, I was so excited. I just wanted a different life for myself and for my family, for my girlfriend. I didn't want to live in the world that I was before. And that was buying things off Facebook and reselling them on eBay.
Okay, Todd. So here's a typical investor of Subject to. He doesn't appear to be well off to me. He appears to be an eBay buyer and seller. What are your thoughts there so far?
I mean, I don't know, man. I'm waiting for the punchline. Is he happy he joined, or is he unhappy he joined? Did he change his life for the good, or did it change his life for the bad?
He's now a maintenance worker in his subdivision because he cannot afford to live. Let's play a little bit more of this.
Difficult because I ran out of money, and I had to look for a job. I didn't want to do that. It sucked. I hated the idea. because I still had this dream and this expectation of I was going to be free. I was going to be unshackled. But my expectations were wrong. And I got a job in my neighborhood as a maintenance person, doing landscaping and blowing leaves and stuff. It's easy. I still work here in my neighborhood 4 hours a day. It doesn't pay enough, honestly. I barely am able to pay my bills. I'm actually not able to pay all my bills.
We're dealing with someone that didn't have realistic expectations. He quit his job. He can no longer even afford to live. He's a local landscaper in his community now. I mean, the guy looks defeated. It's obviously it's not as easy as the commercial that we first watched. Any comments on this, Todd?
Travis, I've been in the real estate business since 1989. That's a long time. This isn't the first type of, revelation for, joining the real estate industry in one aspect or another as an investor or what have you. I mean, look, there's been a lot of people that have been teaching wholesaling for decades, right? Selling courses on how to buy real estate, how to invest in real estate, how to become millionaires, trillionaires, gazillionaires without putting any money down out of your own pocket, right? I mean, this is the kind of thing that's been happening for decades. Seminars, books, CDs, cassette tapes way back when, right? CDs, now internet streams, clubs to join, on and on and on and on about how you can have an easy life and be, doing something that is like the greatest thing, the revelation of the century, right? I think the bottom line comes down to, and this isn't Pace Morby's fault, right? A lot of people are looking for the magic bullet, right? They're looking for the easy route to get rich quick scheme. And the issue here is that it's self-employment, no matter what it is. I mean, if you take being a real estate agent, being a loan officer, being a real estate investor, being whatever, it's all self-employment for the most part, which means you have to invest in things and you have to be capitalized to go to the next step. And I don't think that so much is Pace Morby's fault, right? I think the thing is, and I see it as a real estate broker. People get in the industry, they want to go into easy money. They think that real estate is, being an agent is simple. Yeah, it was the last 2 or 3 years. You could just do whatever and make money because everybody wanted to buy a house. And if you could help them, that'd be great. But now it's getting back to where it's kind of traditional, right? You have to have money to enter the business. You have to be capitalized to run your business. And most self-employed people are washed up, dried up within 2 years. Now, this guy said 6 months. That means he was probably very undercapitalized and had very unrealistic expectations of what it meant to be self-employed. Now he's getting it. Maybe now he'll be able to pick it up and make his money back because it sounds like he's being self-employed through the neighborhood, which, at the end of the day, this maybe will work out better for him than trying to convince people to transfer their homes over to them with trusting them that they don't even know to make their payments and keep things right and legitimate. And I don't know, Travis.
Well, here's the thing, Todd. Like we said in the beginning, we understand why. I'm not saying anything is anyone's fault necessarily, although I don't believe that the $8,000 fee to join is well spent, especially considering you can use the $8,000 as a down payment or even become a broker or a realtor to access the actual data MLS, and then be part of a network of other professionals that help you. So, I don't know, Todd, if this is a good thing or not. Let me show you how much it costs to even join the community. All right, Todd, here's an article from Real Estate Bees. So according to this article, the bare minimum to join this program is $8,800. So it's $8,800. They have 10,000 members. I mean, this dude made $90 million on just subscriptions. Are you kidding me? But look, if you want to be an executive, and you strike me as an executive, Todd, if you want to be an executive, sir, that's $11,800. And better yet, if you want to be a master or even elite, if you, Todd, today you want to join the elites, that's only $18,800.
Travis, let's take a look at that accelerator program. I mean, what do you get for $8,800?
You get a pat on the. I don't know that you get a pat on the back, although I would appreciate one if I spent that much money. But this gives you entry into the Subto community. So you get entry into the community and PACE method. Basically, you're going to learn. So you get to join and you get to learn, which I'll argue you can literally learn the same stuff on YouTube for free. And in fact, if anyone's watching this and wants to learn all these things here, I'll charge you only half the price. If you want to learn all this stuff, I'll only charge you $4,000. What do you think about that, Todd?
I think it's pretty interesting that he was on Graham Stefan's channel. I mean, he's freaking iconic, man. Huh?
Yeah.
He made it to Graham's, but it's the iced coffee hour. It's not the main Graham Stefan show, but I mean, hey, it's still pretty kicking. They got a lot of views. What's the next bump up get me, buddy? If I want to spend, I want to be the executive that I am. I mean, what do I get for the extra $3,000?
This is for the extra like executive. All it's saying is it gives you fast track. Honestly, all I'm seeing here, man, is like with this tier, you get to do like group calls. Maybe you got some personal, one-on-one time with some people. But I mean, I don't see the value here other than just learning. And again, generally we can learn for free. So, and here's the master program. Let's see what the master program comes with a 3-month one-on-one coaching. Oh my gosh. Is it with PACE? Oh, members of
No.
PACE. So you don't even get it with PACE, but you get people to tell you what to do. Again, you guys, if you're watching this, if you need someone to tell you what to do, I'll do that for half the price.
So Travis, what do you suggest? I mean, look, you have a real estate market that is crashing, right? I mean, the sales are down in some markets, probably close to over 40 to 50%, right? Sales.
Yeah.
Agents are starving. I mean, the first advertisement that we heard, PACE was basically saying, if you're a real estate agent, you're washed up and you can't make any money in this business, and you can't pay your bills and you're losing your listings. What do you suggest these agents do?
I'm going to suggest they do what I've always suggested they do, which is use the data to find the deals, stop the cheerleading. I feel like half these realtors are spending, too much time on anxiety and pressure to make money because it's commission. And instead of, again, let me show you guys data. Let me show you wedge. Let me show you cash flow. What do we hear? Oh, the cash bros are stupid. You need to buy right now because home values only go up, Todd, and it's only going to get worse from here. Instead of wedge, in other words, I think what realtors should be doing overall is earning how much commission that they make. Not everyone's doing what you're doing, Todd. You work Monday through Sunday, all hours of the night. Half these realtors are someone's cousin doing absolutely nothing. So overall, what I think people should do is the right thing. I think people should stop taking shortcuts and start working harder, growing, becoming aware, and start worrying about the consumer instead of worrying about food on the table. If their main concern as a realtor is putting food on the table, they need to do something else.
Well, it's going to get tough. So I don't know if you're familiar with, but anywhere, a gigantic conglomerate, real estate conglomerate, they own Century 21, Coldwell Banker, Better Homes and Gardens, ERA, Corcoran, a big conglomerate, probably one of the largest, if not the largest in the U.S. They just settled a lawsuit claim, $83.5 million in, I think, October 16th. There's the trial. Several of these class action lawsuits that are actually pending. I think the first one, the October one I'm talking about, is for $4 billion. The one that's slated for the first quarter of 24 is $40 billion, this class action lawsuit against brokers, NAR, the multiple listing services. I mean, big time, right? Where they're saying that, agents have, starting at the top, NAR is alleged to have, violated these Sherman antitrust laws. This is a lot of the foundation of the argument with the plaintiffs. And the attack is on commissions, right? The agents don't do enough, or their job isn't worth the amount of money that they're getting paid. And then they're arguing that this is one of the reasons why the housing market is so overpriced. And I think that, the attack here is a perfect time to go after all of these agents, because I think what's going to happen is commissions are going to end up ultimately, coming down. They're 100% negotiable anyway.
Yes.
A lot of people don't even realize that. But I think what's happening is, all these agents, the 1.6 million licensees in America, more than the inventory that we have for sale. We have more licensees. It's a perfect sort of like stomping ground or breeding ground to, try and go after these people to say, hey, spend your money here. Let me teach you another way to get rich in the industry, because obviously sales isn't going to do it for you.
Yeah. Can I ask you, Todd, and if you can't answer, that's fine. But overall, do you think that the Subto, the Pace Morby program, do you think it's a Ponzi scheme?
I don't know the true definition of a Ponzi scheme, but Travis, I would probably say no. I don't think it's a Ponzi scheme. I think that it's an opportunity for somebody like Pace Morby who knows something, to capitalize on that. Like I said, I think there are a lot of people. Look, if you look at the billionaires in America, most of those billionaires did so through real estate, or they're invested in real estate. Now, when you get global, and you start looking at global investors, Canadians, Chinese, investing in real estate all around the globe, but especially here in the US, I think it's a very attractive sale, right? Hey, look, if you invest in here, I'm going to show you how to capitalize on the next thing to come. Yeah. I don't know that it's a Ponzi if it never happens. I don't know if you're signing up for education, you can make your education as expensive as you want. If people are crazy enough to pull out their credit card and spend the money on whatever education it is. Look, we have college debt that's out of control. Is college a Ponzi scheme? Right. So I think, that would be what you would have to question, right? If you're looking at it, but the government's not going to bail out the people that went to Pace Morby's college program or educational program, whatever it's called, if they can't pay their credit card. Or more importantly, I got something interesting here. Maybe you could just argue that you don't have to, if you put this course on your credit card, is that like buying the mayonnaise from the grocery store? Maybe you could just simply give it back. Maybe it's the same as the deed that you don't record. Maybe if you don't use it, maybe if you don't actually pay your credit card from buying the thing, maybe you can just give it back.
Well, Todd, I'll tell you this, man. I need to know more information before I would be so bold to claim that. So if Pace Morby or anyone in his community, they want to talk to me, talk to us, explain to us how it's not. But I'll tell you this, man, at first glance, it sounds like to me what they're trying to do here is sell that used, not even new, used mayonnaise and acting like it's Dom Perignon champagne. It doesn't seem to me like people have the proper expectations. And I'm basing that off of comments from my users that have no idea about acceleration clauses or due on sale clauses. They make it seem like there's no risk whatsoever. So I think part of what we want to do is just be aware of the risk. Would you agree with that, Todd?
Yeah, absolutely. 100%. You should be educating yourself anyway, no matter what you're doing. No different if you're a first-time buyer who've never bought a house before. You can be enticed into spending your money for something that isn't necessarily in your best interest. And I think a lot of people are mad at real estate agents because of that gist.
Todd, I definitely appreciate your time. We've been talking for quite some time. You guys, don't forget to go to Zach's Realty, give him a like, give him a subscribe, and do us a favor, comment below. We both realize there's some things that we don't know. I'm pretty sure we got this one on lockdown, but if you guys have anything you want to add, comment below, shoot me an email. We would love to talk to you about it. And other than that, guys, if you're out there investing in real estate, I wish you luck and I hope you win.